The biggest NPAs or the non-performing assets and loan defaults are from personal loan and credit card segments. Now, this according to an RTI response from the Reserve Bank of India. The personal loan segment has gone up by 51% from March of 2023 to June of 2024. And the credit card NPAs have also shot up 136% from March of 2020 to June of 2024. Now, credit use is rising rapidly and so are NPAs. The value of credit card transactions has also tripled in the last 3 years during the year ending March 2024. The banks have touted their success in reducing NPAs over the last 2 years, but at the same time, these are the segments which are suffering when it comes to NPAs. Personal loans and credit cards NPAs are on the rise. What's leading to this trend? Joining me to discuss are directors of Indian Institute of Finance, Professor Aman Agrawal. Also with me currently is Lloyd Matthias. He's an angel investor and business strategist and independent director as well. Gentlemen, thank you very much, the two of you, for taking time out. I want to come to you first, Professor Agrawal. What are we making, of these trends? Now, this, of course, is by the way of RBI data, which goes on to suggest that although NPAs are going low, it's the personal loan and the credit card segment which is currently a pain point when it comes to non-performing assets, or rather, individuals' ability to pay back.
You see, I agree that the numbers are alarming in terms of percentages which you're talking about, but it's a question of the magnitude of the amount which is there as well. So unless we have the absolute number or what is the kind of magnitude you're looking at, then it doesn't become a concerning area, specifically because the loans which NPAs have been created in the past are tantamounting to actually corporate loans and loans which have been given to farmers or industries or MSMEs or entrepreneurs, which run in lakhs and crores and not in few 100,000 rupees or maybe a few lakhs. And that is where the difference is. Secondly, in case of credit card loans, even if someone defaults for a day or two, one ends up paying a huge chunk of money because the interest rates are tantamounting to 50, 51, 60% from card to card, which is varying. And as a result, the bank ends up making a lot of money. So in case there is a default more than a specified period, a few days, they normally stop the credit card as well. So that is something which the banks always do, and it doesn't really make a worry even if it is 100, 130 or 140%, because
Okay.
it is the absolute value which is important. That is how many lakh crores is the one which is defaulting and not the percentage here.
All right, I have some numbers here, Professor Agrawal. If you could help us understand whether these numbers look substantive to you. So, in personal loan segment, NPAs have gone up 51% from 7,422 crore rupees as of March of 2023 to 11,210 crore rupees, which is about 1.16% in June of 2024, from 0.93% in March of 23 to 1.16% in June of 2024. Does that number now, that figure looks bad to you?
It does not look too much alarming to me, because it's only going from 7,000 crores to 11,000 crores, which is not so much of, given the size of the banking and the way digital transactions and credit transactions have gone up. This number is not alarming. As I said again, you see, there's a definition of an NPA which defines it in terms of number of days one has defaulted in terms of payment.
Right.
This number is quite small as compared to the total NPAs you were just compared when you began the story about the NPAs being reduced, where the banks have been telling RBI that the number of NPAs which had been generated, which used to be in lakhs and thousands of crores. It is not few thousand crores, it used to be lakhs and thousands of crores. Each industry, each company at times defaulting to 300, 400, 500, 5,000 crores, where the defaults used to be there. So that is a fairly large, and which is only one organization which was defaulting, a few, select few, 10, 15, 20, 30 organizations defaulting, not a number where, there are lakhs of people who are actually taking this credit and defaulting. So the
Okay.
recovery rate generally in case of personal loans as well as credit cards is much superior as compared to, the loans which are given to corporates, or large chunk of loans which are given to industry or even to farmers, as a matter of fact. If you really look at the credit history and the NPA structure between 2000, almost 2003-4 to about 2014 or so, or 15, I would say, on an average, about 4.5 lakh to 5.5 lakh crores was being given as a waiver by Government of India, by different governments in power, every year against year, out of which roughly about 45 to 55% was nothing else but farm waivers which were granted. You can imagine the kind of NPAs which were getting generated and sponsored through your and my taxpayers' money by the central bank and the governments in the past. So that number has gone down to almost 50%, and that's where the major chunk of concern is. So, as I said, the percentage is alarming, which you just mentioned, and it is a cause of concern. And I'm happy that your channel is highlighting this issue,
Right.
and the RBI would become active in terms of getting it up. But it is not a grave concern, given the fact that we are moving to a digital economy in the last 5-6 years.
Okay, since we talked about personal loan, I also briefly want to touch on credit cards, because NPAs here have shot up 136% from 2,404 crore rupees from 2020 to about 5,679 crore rupees as of June of 2024. Lloyd Matthias, this is not a substantive number, sir. When we look at loans and NPAs that are doled out to corporates, as Professor Agrawal pointed out, at the same time, it is alarming, because as we get more digitized, and people like you and me with perhaps not a huge buying capacity, people like us who are taking maybe smaller loans, who are buying gadgets, electronic items, essential items through our credit card, this reflects a trend on our ability to pay back.
Okay, so quickly, I just want to touch upon, I think, an important point that Professor Agarwal made. I think the reality is, and I heard your numbers loud and clear, that NPAs in personal loans have gone up 51% from 7,400 to 11,000 crores. I would just want to reiterate the fact that that's still very, very marginal in the context of the holistic bank NPAs. Now, the Reserve Bank has bragged about the fact that bank NPAs have come down from almost 7 lakh crores in March 22 down to less than 4.5 lakh crores. So I think the personal loan NPAs are still very marginal. And I also take into account the fact that, as Professor Agarwal mentioned, a lot of farm loan waivers, electricity waivers, and so on, have a much bigger negative impact on the economy. So it is a concern. Having said which, I think what we are seeing right now in the growth of credit card loans and defaults thereof, I think is symptomatic of a larger issue. It's a fact that younger Indian consumers are beginning to use or kind of depend less on savings as a generation ago. The generation that grew up through the 70s, 80s, and 90s, they came out of an economy of shortages, right? So everything was about saving, about providing for the next generation. I think newer generation consumers, millennials and Gen Z in specific, are living more here and now. So the concept of an asset life lifestyle, why do I need to own a house when I can rent one? Why do I need to own furniture when I can lease it? And so on and so forth. I think that's become more common. The concern, though, of course, is that a lot of this is belief that they will have a guaranteed income for life, right? And I guess at your 20s and 30s, you don't really look at the long term. But I think somewhere along the idea that you need to save up a bit, you need to grow your wealth, you need to grow a corpus, I think that thinking needs to come in. Some part of that has also got accentuated by the booming stock markets. I know of 20-somethings right now who think nothing of doing a little day trading to make enough money for the weekend out, or for a night out in town. But therefore, that old Indian culture of saving everything and kind of investing it in the most safest assets, starting with fixed deposits, gold, and maybe over time buying a house or buying an asset, I think that is diminishing. And to my mind, while it's an early trend, I think it's something that could change the face of the country in the next 20-30 years, right? So while what you're pointing out is right, it is a concern, it's small enough right now, but it's also the beginning of a trend that could be in the long term quite harmful to the economy.
All right, Professor Agrawal, do you agree with that? I know these are small numbers vis-a-vis the large loans that banks dole out to corporates and other companies, but at the same time, we're talking about small loans. We're talking about a class that does not have the income that big investors, big companies have. So is this a trend concerning to you when you look at the percentage? And this also coincides largely with data that is coming out around indebtedness, the growing indebtedness of middle class and lower middle class families. When you look at this data, along with the data on indebtedness, is that something that worries you?
You see, this is the indebtedness component, as highlighted by my colleague just now, is something which has become a trend now. And this is a trend which we have seen in more big cities, tier 1, tier 2 cities now, which used to be contained to tier 1 cities earlier. And still, there is a large chunk of population which lives in rural India, which actually contributes maximum to the saving component in terms of the India saving component, which we look at. So there is a balance still there in terms of saving, but certainly that is a way of life, a trend which is there, which we have seen in the West, in Europe, and the US, has come up to be there today with the tier 1 and tier 2 cities, even in tier 3 cities to a great extent now. Tier 4 cities are still, isolated from this particular effect. However, when you come to these numbers, as I said earlier, the percentages certainly look alarming. On a smaller component, they're also important to be considered, and the Reserve Bank, the banks need to look at it. However, they need to be also consideration, like let us take a loan of, which is a very popular case of Kingfisher Airlines, about 11,000 some crores, which was defaulted there. But you see, that already had a backup of what? Airlines which are lying, which they could sell off. Plus, then they attacked the personal assets of Vijay Mallya, which were tantamounting to about 13,000 plus crores. So naturally, that would naturally get covered therein. Although they could not have done it technically as per the accounting norms of private limited and public limited companies. Limited liability concept shields an owner. However, the government went in because of the public money which was involved in this. However, in these personal and as well as credit card loans, I don't know, the trend is that when you default on a credit card, not only that your CIBIL score goes down, but also the fact that other credit cards, they generally have a connection. Most banks have a connection within the credit card wings of the security and cyber and other issues, where if someone is defaulting, the highest defaulters list is circulated, and then their other credit cards are also blocked simultaneously. In
Right.
case of a personal loan also, normally one does not get getting a personal loan is difficult. I'll tell you my own personal case. I had fixed deposits. I wanted to seek some personal loan from a bank where I had huge chunk of money against fixed deposits, just to seek and get an idea of how personal loan works. I applied for a personal loan of only about 1 lakh rupees, whereas I had kept roughly about 40-50 lakh rupees in that bank. Now you can imagine where I have deposits, I wanted only a lakh rupees loan, and the loan processing officer called and said, we can give you a business loan, but we cannot give you a personal loan, despite that I had such a huge chunk of money kept in fixed deposits. Now, getting a personal loan is not an easy task. Normally, banks generally give the personal loan also against an asset, even like a housing loan, any other loan which is backed by an asset. So that is why banks are not so much worried about these loans, because there is a backing asset which generally is there with some of these loans which are given out, which is not the case with the corporate loans per se, where you do have some security, but that security value may be hyped up, like in case of letter of credits, in case of Kingfisher, and a couple of other cases which we have seen in the past, where they were false credit lines which are given out based on false information in balance sheets. But in these cases, there are actual assets which are at stake, and as a result, these do not become an alarming factor per se, because bank has a recourse of capturing the asset. And many a times, the valuation done by the bank is always less than, almost I would say about two-thirds less than the real market value of that asset which they're actually pledging it against. We have
Right.
seen that personally with a couple of cases which I have known, where the banks tend to keep the value low while giving out some of these kind of personal loans or even housing loans per se. So from that perspective, these loans are fairly largely secure. A small component, I would say about 8 to 10%, because of negligence or a misconvenient convivance with the managers might be there, that there may be about 10-15% of the total loan portfolio which is defaulting, which you're talking about, which might be actually totally really bad, or as we used to call toxic loans in the past, when this NPA problem started coming up post 2000 and all, after the financial crisis happening around the world. But toxic assets have not been so high, and that's where it's not a major concern area, and that's why RBI also does not look at it so carefully.
All right. Right, Matthias, I think one of the conversation you and I have had over the past 1 year is vis-a-vis the personal loan growth, the segment of personal loan growth and the credit card growth in the country to the tune of about 13 to 14% each respectively. And now we're also looking at the NPAs, building up in these two segments. I don't know if the proportion is the same. It clearly looks like credit card NPAs are far higher when compared to the growth of credit cards in the country. Does that really tell you about perhaps the lingering inequality in India as well? Because a lot of people, when looking at this data, will go on to tell you that while on one hand, NPAs of large corporations seem to be going down. So it could be one of the two situations. A, their ability to pay back is better than, users' ability, like individual ability to pay back. One. Number two, it could just be that banks are very careful before doling out loans to large corporations, given that we've had a history of, building NPAs. In your assessment, is this a trend that also goes on to talk about large inequality in India?
Before I get deep into that, I just want to make one little comment to recognize that India's savings rate peaked at 2021. And soon after the pandemic, the savings rate has declined. Right? We're talking of saving rates falling to 18.4% in 2022-23. So clearly we're reaching a point where banks will have to fight for deposits, right? You recognize that interest rates have come down. A lot of new age consumers would rather put their money into mutual funds. Some of them do direct trading. You've seen a huge jump in the number of mutual fund investors. We've seen a huge jump in the number of people trading online to various online apps, the Grows, the Zerolas of the world. I think all that is resulting in people looking at alternate financial instruments outside the state-owned bank deposits, which was, for 99% of India, the first and only port of call when it came to savings. So I think that trend is accelerating. People are beginning to see much faster returns, or shall we say higher returns, when it comes to things like mutual funds and stocks. Albeit there could be a caution that there could be a meltdown at any point in time. But I think that's resulting in banks not being the first port of call for a lot of younger and newer generation Indians across the spectrum, be it urban India or, as Professor Agarwal pointed out, down to tier 1, 2, and 3 cities. So I think that's one aspect. The second aspect clearly is lifestyles, that younger consumers want to live a lifestyle in the here and now. Right? I don't need to earn and save up for a holiday that I want to go much later in life. If I want to go to a great destination, I want it, and I want it now.
Yeah,
right?
the culture of YOLO, the culture of YOLO that we discussed earlier as well.
Yes. Yeah, you only live once. You want to make the most of it. So people are putting money down on the credit card and saying, okay, I'm going to go for a great holiday. I might end up paying for it for the next 3 years, but so be it. But that's the nature of how I want to live. So I think that's the other aspect that's coming through. And the third clearly is also pointing to a section of India that is highly unequal, right? The fact that corporate earnings are growing, or not corporate earnings aren't growing, but at least people working in corporates are getting much higher income. And there's a part of India that's possibly being left behind. Now, there are various data streams, difficult to believe one set, but I clearly think that we have to be concerned about the issue of inequality. But at the same time, we have to recognize that younger people will not, like a generation ago, save up before spending for that big car, for that great holiday, for having a fantastic experience, for watching their favorite concerts, be it Bryan Adams or Coldplay. And I think that's a recognition of a changing generation and something that we have to come to terms with.
Okay, so it could be a cultural change, is also reflective of how people are saving today. Before I close this show, I want to come to you, Professor Agarwal, for one last question. A variety of factors at play here. We're of course discussing financialization of savings on one hand, which is also at an all-time low. At the same time, we're looking at bad loans growing from personal loan segment, from credit card. When you put together these trends, they're reflective of the consumption pattern and the consumption habit of younger people today. B, it also perhaps is a lesson from where India is going to head from here on, something that perhaps we need to dig deeper into.
No, I agree with you. As I said earlier, that the fact that you're raising this issue is an important concern and an area of concern which has been looked upon. Small errors and small problems can lead to a bigger problem, and which could be systemic in nature. And this is what is actually seen in the West, specifically in the United States in particular, where people are living on their future incomes to the extent of 110%, 115%, many, on an average, which is there. Some people live to about 200% of their incomes, and which does not bring in a good framework of sustainability and survival, which is important for the system and the economy and the civilization per se. So that is very true what you have pointed out, and I think it's an important concern which I hope gets highlighted through your channel for banks and even for the Reserve Bank of India, that irrespective of what quantity of loan it may be, but it also needs to be looked upon as an NPA and should be considered as an NPA of matter of concern. Having said that, important point you raise is also there, and I think that is a very valid point why we are seeing the NPAs of corporates falling down also, is the point that the lending behavior of banks has actually changed in the last 4 or 5 years in particular. Many companies, small, large, mid-size, are not getting fundings and financing from banks in the last 4 or 5 years. And so the banks are not financing these funds. They're in fact keeping them as deposits with the Reserve Bank of India or other places, on a safer side. And that is where their NPA levels have actually come down also to substantial levels, given that they're playing safe instead of actually financing. And that's where we can see that the growth trend, which India should observe in a normal course, we should actually cross around 8 or 9 or 10%, given the ability we have, the capabilities and the structures, and the fact that the world is looking at India as a manufacturing hub, as a a lot of other activities.
Professor Agarwal, as important this conversation is, and as much as I would like to carry on, I think this will be another discussion for another day. Thank you very much, sir, for taking time out, for joining us. Lloyd Matthias as well. Thank you. Always a pleasure having you on the show. Thank you, gentlemen.